We're going to do a brief video on NFLX Stock Analysis. We've got a NFLX daily chart up here for you with a green 5-day, a red 20-day, and a blue 200-day moving average. Let's take a look real quick. This chart looks kind of weird because the prices are so high. This stock made a high up here of $700 back in November of 2021, came down, tested the 200-day moving average, which you'll notice was at that point flattening out severely, and it did not hold the 200-day, didn't bounce off it, went right through it and kept right on going. So this stock entered a bear market right around January 2022 and still in a bear market. You can see how this stock trades. It makes huge declines, then goes sideways, huge declines and goes sideways. In case you can't notice, that's a gap from 507 to about 408. That's a $100 gap in that stock. That's incredible. Same thing here. It's a huge gap, $333 all the way down to $247. Incredible gaps. I'd have to do research on that to see what's going on there. I don't know if this chart's accurate, but if it's accurate, those are incredible gaps for any stock, much less Netflix. So that basically shows you how this stock trades, and sure enough, as we move forward, we can see that it's still kind of trading that way. It's got to what the market participants appear to think is the bottom, around the one, let's call it the 180 level. It's oscillating back and forth around 180, but it's mainly sideways, and it's been mainly sideways since May all the way through the summer. And we got a little blip up, but we're still sideways all the way here through the end of August. So what we're getting right now is an attempt to test the 200-day moving average. The volatility in this stock has collapsed, but it's still good for a stock. You can see on this day, I'm highlighting July 27th, this stock had $13 in one-day range. That's incredible, but it's not anywhere near the range it had back here. You know, this is over almost a probably $27 day range back in February in the spring. So the volatility of this stock on a daily basis is way down, and the volatility overall is way down, but it's still tremendously interesting stock and a tremendously volatile stock in terms of its daily range. It goes up and down quite a bit. So I bring that up because today we're down $8 on this stock. Today's the 6th of September. We're down $8 on 5 million shares, which is a little bit more, about 60% more, 60% or 65% of its average daily volume. So we're down $8 today. So let's take a look and see what's going on. We have a stock that's below its 200-day moving average. It's below the 20-day moving average, and right this second it's below the 5-day moving average. But the net effect of all that is this is still a bear market stock. It's a little bit difficult to deal with from a technical analysis perspective, because this stock trades like a low volume penny stock almost. I mean, if you looked at this stock and I didn't know what it was, I might guess that it's a penny stock. It does not trade like a normal, very liquid stock. I don't know why that is, but that's what's going on. Again, the numbers, the absolute numbers are huge, but the visual representation of this stock on a chart like this looks more like a penny stock to me. So very difficult to use moving averages on this. I wouldn't rely on anything I say. It's all my opinion. It's all for entertainment purposes only. But in general, moving averages are usually pretty good at giving you an idea what's going on. I do not necessarily think this is the case. I would have expected a stock like this to bounce off this 200-day moving average, as you see here. But we didn't get anything like that here, so it's a little unusual. But if we're going to be traditional about it and view it from a technical analysis perspective, there's a shot, and not a great one, that this stock will rally to the low to mid 290 levels and test the 200-day moving average at about this location here, the end of September. I don't think it's a very good shot, but that's, you know, what you would expect a stock like this to do. Although I want to emphasize again, this stock's not trading like a normal stock. So just a total guess. You could just as easily get a challenge down and to make new lows. Now, that is what this stock normally does. If you'll notice, this stock, when it goes quick. It makes its moves down and then sideways. So from a long perspective, you have to be careful here, because if this stock makes another downward trend, another downward break, it could be hard and fast. So I really can't give you any kind of particular analysis on this stock right at the moment. But if I were to look at this, I'd say we could get a rally up to challenge the 200-day moving average, but we could just as easily get a tremendous drop down to another level. Keep in mind, even though this stock looks like it's sold out, it's still a $225 stock. It's got a lot of downside risk in it if the market wants to move it that way. It's not like we're at $5. So I'd be very hesitant to use moving averages for anything other than what I always use them for, which is entertainment purposes only. Let's go down and take a look and see what RBAM Research says about it. We have NFLX here. This is a 1-day column, a 5-day hold column, and a 20-day hold column. NFLX is saying, RBAM Research is saying for entertainment purposes only $220, $222, and $225. So let's go take a look. Today, this stock is trading at 226, and the low is 214. So it looks like it's got into all of those prices. Let's see. The low is 214. We're up here. Yep, so it's in all of those things. All of those prices. Our low was 220 and the high was 225. So it's in the trading range for NFLX is in the trading range for RBAM Research's algorithmically generated prices. Again, they're for entertainment purposes only. So if your own analysis said it might be a good thing to do, it is in the range to buy. But again, you have to use your own judgment, your own analysis. You can't use our entry prices for anything other than entertainment. So it's hit our buy range as far as entertainment purposes go for RBAM Research. But again, this stock is not trading normally as far as I'm concerned from a technical analysis perspective. You can get all of our entry prices. We put up 190 a day for stocks, more than 190, Monday through Friday before 7 a.m. You can see these are up for September 6th today. And again, 1, 5, and 20-day holding periods. So these are worst case. Take your profits as soon as you get them, if you do, or close out at a loss. Worst case, just before the end of trading on the 1, 5, or 20-day holding period. So if you bought today, close out end of trading tomorrow. Buy today, close out the end of 5 trading days, and so forth. Again, all for entertainment purposes only. You have to do your own analysis, but you can get them all at rbamresearch.com. Absolutely free, no credit card required. We cover 190 stocks. We cover the major forex pairs. We cover BTC for crypto, and we cover the most liquid futures. The stocks are longs. Everything else is longs or shorts, posted every day before 7 a.m. Monday through Friday. Again, rbamresearch.com. There's a link in the description below. You just go there, sign up for free, no credit card required, and get them to your heart's content. If you like this video, please click the like button. If you want to subscribe, please do that. If you want to leave us a great, helpful comment about how to make these videos better, please do that in the comments section below. We'd love to hear from you. And keep in mind, everything you see and hear on here, including entry prices, are for entertainment purposes only. It's all our opinion. You need to do your own analysis. You can't trade with our prices, and they're just for entertainment. And you definitely trade at your own risk.